All right, so AppLovin, last I put in, the price was $3.85. Now it's $5.05. In just a few days. Unbelievable. Yeah, I mean, I updated this relatively recently. I just did one quarter. At $1.2 billion last quarter in revenue. Sort of like a Palantir type stock. 36 times revenue. Whew. Wow. All right, AppLovin. Got the press release right here on the terminal. How'd they do? 1.372. So sequentially, they grew quite nicely. That's 1.4 billion in revenue. A lot of cash flow, actually. So maybe 24 times next year's sales. Not exactly cheap, but 20 times sales for SaaS is not that crazy. All right, let's take a closer look here. 1373, 320, 452 in COGS, so pretty high margin. Looks like it's very scalable. Earnings grew quite a lot there. Yeah, this is like a lot like, reminds me of Palantir. Like, it's just very, the financials at least. I think the business is a little different, obviously, but financially, just like, can you really bet against this? It's very difficult to do so. Okay, Rigetti and IonQ back down again. Love to see it. You love to see it. Laundering money? Yeah, I don't know. That's a big accusation. People make stuff up, but when you have this kind of revenue growth, I mean, I do have to obviously look into the actual business and see what the hell it is. I looked briefly, and I didn't see anything that jumped out at me that was too crazy. I know there's some criticism. But you can't beat that growth. Man, I posted a picture of me from prison and on Twitter, and like, these people are just absolutely crazy on Twitter. Everybody's obsessed with homosexual relationships. It's very funny. I think it's a projection. Okay, so 2.1 billion cash flow. I mean, that's the big story here for... That's the big story here for AppLovin. 2.1 billion in cash flow. That's really, I think, like for Palantir, people look at the sales number and they really don't get it. So 80 times cash flow for a company growing revenue 40%, that's crazy. So if your revenue grows 40%, how fast would your cash flow grow? Pop quiz for you guys. Right? You've got revenue is, say, X, and it's going to be 1.4X. You have some kind of cost Y, Well, cash flow and earnings are the same thing. So you have some cost y that's going to be something like 1 point, I don't know, let's just say y prime y. Right? We don't know what y prime is, but we presume it's going to be less than 1.4. Let's just make it y prime times y. That's a little easier to understand. We don't know what the rate of growth of costs is, but almost every business, the costs will grow less quickly than the revenue, right? So what will earnings or cash flow, which we'll call Z, ooh, this mouse is something. All right, what will be Z prime, if you will, of Z? Yeah, that's a good guess, PWI. It depends, obviously, on almost completely on the y prime, right? But let's say it was cost grew 20%. Okay, so what would the earnings be? Well, if it was $1 billion, then it would be 1.4 billion here, 1.2 billion here. Well, let's say it's half as much. So this would be $500 million. So let's say that it looked like this. And then 1.2x on 0.5 is obviously, we could do that in our head, but we'll just put it down here for proof, 0.6. So 1.4 minus 0.6 is 0.8. So that guess was really good. In this circumstance, it was 60% cash flow growth. So the point is 40% revenue growth, and they did 45% last quarter, resulted in 60% earnings growth. Okay? What if that happens 2 years in a row? Okay, so the cash flow is 2.1 billion, and you're talking about 60%. Let's do that times 2 years is 32 times cash flow. That's a lot more reasonable. That's why these growth stocks are so exciting. And you could have known this yesterday. Yesterday, it was not hard to figure this out. Yesterday, the stock was 380. That would have been 24 times earnings for maybe the fastest growing company on the stock market. So yeah, everyone's talking about the right things here: operating leverage, contribution margin, all that stuff. And you're getting this big boost. So a lot of people kind of just don't understand, Palantir's growing cash flow 100% year over year. So Kami, I think you're thinking too much about this stuff. I mean, I thought, is that something you're something you're really interested in, but it's not something I'm really interested in, I'll say that. So, these ultra high growth stocks, look, people want to take them down a peg. So you can investigate them, and maybe there's something there, maybe there isn't, but just on the basis of revenue and the basis of, earnings, you just have to see that. Look, one of the things I've also said over time, I hope you guys have picked up on, is anytime the second derivative of revenue growth is positive, that's a really special company, because almost every company, as you get bigger, your growth rate should slow down just because the laws of large numbers. And when I noticed Google's growth rate accelerating in 2006, I just started my hedge fund. I was looking at Google, and the company was growing faster as it grew, which is really strange. That's happening with Palantir. That's happening with AppLovin, a couple other companies. It shouldn't last too long, right? Otherwise, the company will grow to infinity. But when you see that happening, it means something pretty special is going on. And again, it says nothing about the actual business itself. We have to do deep dive into the business. We're assuming it's a normal company. We're assuming, sorry, I'll update the Chiron here.
we're assuming there's no fraud, we're assuming there's no chicanery, we're assuming there's not going to be some big sea change in buying patterns or something like that. Well, the rate of change is 44%, but the second derivative is the rate of change, which is positive. It's gone up. It's growing, check. It's growing faster than before, so it's accelerating. So in calculus, it's second derivative. Yeah, second derivative. So it's accelerating. And yeah, maybe there's something fishy going on with AppLovin. I'm not saying there isn't, but for now, the stock doesn't look that expensive if they continue on this path. And again, sometimes when you're debating whether or not a company is going to continue on a path, if they're actually growing faster every quarter, that's like really a good sign that they're going to continue on that path. So ad revenue for them was the bulk of their business. Notice that the trade desk had a really bad quarter. So I don't know if they're taking share from them or if they even operate in the same business. I don't think they do. AppLovin, I think, is all mobile. And then they have a games business, or an apps business, but I think that's mostly a games business. And the games business is the one growing really, really fast. I mean, it's almost doubling year over year. The apps business is flat. So like the fact that ads are growing year over year, doubling, that's insane. I mean, that makes the cash flow story even better. Oh, they're selling the apps business. Interesting. Wow. And what are they? They're guiding to 1355 to 1385. And they probably beat that. Q1's almost always softer than Q4. Yeah, I don't know if they have a buyer or what they're doing there, but again, I'm not too current and fresh on this company. I just, know it's something people really like to look at. Yeah, I mean, look at that segment EBITDA margin, 78% EBITDA margin. How crazy is that? What business has 80% margins? Operating margins. So they're, that's a wild business right there. Never heard of that. No, NVIDIA doesn't have 85. NVIDIA doesn't have 85 operating margins. NVIDIA doesn't even have 85% gross margins. Yeah. No, look, I'm sure there's something weird about their product. We have to dissect their product, see what kind of value it adds to their customer. This is purely a financial analysis. No real, product analysis at all. Yeah, AppLovin was, I think, the best stock on NASDAQ last year, if I'm not mistaken. Number one or number two. No way. You're lying. All right, we got to ban this guy, adventure player. Nobody's bullish on ETH.